This is Tom Bernanke, and I have a great guest here, Dan Tripp, today. So we're going to be talking about long-term care insurance, a very important topic. You know, me being in the health field, I hardly know anything about it. But when I met Dan here, he is the expert in the Metro Detroit area. So I'll first say, if you need anything with long-term care insurance, get a hold of Dan. I'll put the info down in the show notes, but he can definitely help you with that. And he's going to be teaching us some of the most important questions on long-term care insurance today. So, Dan, tell us a little bit about yourself.
Well, thanks, Tom. Been in the insurance business about 32 years. Most of that has been in the focus of like long-term care and life insurance, working with older adults, making sure that their plans are in place, helping them as well as myself age gracefully.
I guess question number one, Dan, is what is long-term care insurance? How does it differ from like your standard Medicare or your Medicaid?
Long-term care insurance, first of all, is issued by insurance companies. So that's what kind of sets it apart from the government programs of Medicare and Medicaid. You can think of it in terms of just like any other form of personally held insurance, whether it be life insurance or homeowners insurance or health insurance. Comes with a premium, comes with benefits. It's intended to pay for expenses that Medicare typically doesn't cover. And that could be housing costs. In most cases, that's what it's used for, is if a patient has an assisted living requirement or a memory care requirement, Medicare does not pick up the cost of those facilities. And that's either a private pay thing or the insurance kicks in and pays for that particular residence.
Yeah. And I know for me personally, just seeing people at their homes, it's always a shock. People don't realize how expensive this stuff is going to be. And like even to me, being in healthcare, I never knew just how tough and expensive it is for people. One great point about long-term care insurance is if you can't take care of yourselves, that means basic daily activities like getting around, you can qualify for assistance with a company like Assisting Hands Home Care if you do have long-term care insurance. This gives you about $4,500 a month for a lot of the clients that we see here to provide home care, to give you a break if you're a family member, to get them to doctor's offices. So a lot of the times an assisted company like Assisting Hands can really help keep your loved ones at home if they have long-term care insurance. And even if you don't have insurance, you could get, 4 hours a day or so to get help. So click the link below to find out more. That brings us to our next question, Dan, is what is the cost of long-term care insurance, or how do people get started that just have no experience in it? Like, what should they do?
Well, the first thing they should do is meet with somebody who knows what they're talking about. This is not an insurance product that you can go online and do like auto insurance and get us 16, 20 different quotes and check it out and make sure that, I like that one better. First of all, there's only 12 companies that sell long-term care insurance right now in the country. So your choices are very limited, and all of them require the aid of an agent. You can't do this without having a professional be there because of the laws that surround senior care in this country. The second thing to know about it is how much can you afford? And when it comes down to the question of money, I think the balance becomes whether or not you want to try and pay for your care completely out of pocket. You mentioned home care. Even on an hourly basis with a home care product, a home care facility, a home care agency, that has to be, the check's got to come from someplace. And a good long-term care policy, all long-term care policies today, in fact, that are issued cover home care. So there's no question there that it might not be covered, it is. The second thing is to consider is how much coverage do you think you need? And that's why the agent is so important to talk to. Because depending on your age, if you're 50, is a lot different discussion than if you're 65 or 68 or 70 because of the time frame involved. If you're 50, you're not going to need the insurance for maybe 25 or 30 years, if at all. You don't want to pay for a huge benefit that you might not ever use. The smarter way to do it perhaps would be to take a little smaller benefit and put some inflation into the product and let it grow with you. As you age, it ages. It keeps pace with inflation. So the cost of the insurance is based on certain things. It's based on your sex. It's not gender neutral, so males get it for less money than females. It depends on your age. The younger you are, the less it costs. It depends on how much benefit you want, because each dollar of coverage comes with a cost. It also depends on, do you want inflation, because inflation is not free. So there's a lot of moving parts, but I'll give you an example. Maybe that would help. Let's take a 57-year-old male. He's buying $4,000 a month benefit for 3 years, which means that he just bought a bucket of money worth $144,000 that he can use for long-term care. Now I'm going to put an inflation rider on that of about 3.5 to 3 3/4, which means that over the next 17 or 18 years, that benefit will double. His premium will stay the same. So he's going to be leveraging his money more and more as the policy matures. I'm also going to look at, well, let me step back a second. All these policies come with a beginning date elimination period. It's like a deductible, if you will. Typically that's 90 days. So the client is on the hook for the first 90 days of costs. I can put a waiver on a policy that's very inexpensive, but that waives that 90 days, so that if the doctors sign off and say you need help, it starts with day one. There's no 90-day having to scramble around to get money to pay for something that might cost $4,000, $5,000, $6,000 a month.
Say I'm a 65-year-old woman with diabetes, but no other health conditions. Is it worth it? Is it expensive? Like, what's your thoughts on that?
My thought is, if you can afford to buy the product, and it really comes down to a discussion of your assets. Do you have the wherewithal to be able to afford a monthly premium? And if so, it's definitely worth it, especially in lieu of the fact that if you do, let's say, have a stroke and have to go into an assisted living facility at $5,000 a month, how long will your money last? So for a 65-year-old woman in good health, diabetes really isn't an issue when we talk about long-term care. Her premium is going to be in the $250 per month range.
Is that consistently $250, or can we expect that to go up over time?
It'll stay. Whatever the issue policy, premium will stay level with the policy no matter what. Today's actuarial companies are very good about how they've priced long-term care. In the past, we've had a lot of price increases. Today, we don't see any in new product. So your 65-year-old can be very comfortable in knowing that her premium is going to be the same no matter what, that it's going to pay when and if she needs it. But if, say, even $300 a month or $3,600 a year is much better for her than $60,000, which is what it would cost her if she didn't have somebody else paying.
Very nice. So the next thing people want to know, and if we could do specific examples as well, is when is long-term care insurance worth it? Can you give us some contrasting examples when it would be worth it and when it would not be worth it?
Are you talking in terms of cost or more to a peace of mind?
Let's start with cost.
Okay. The younger you are, the less it costs. So there's always that to consider. If you're 50, it's going to be much less than if you're 65. Now, of course, you're going to pay for it for a longer period of time. But as we know, things like cancer and strokes and heart conditions don't wait. They don't say, well, we're going to wait till you're 65, Mr. Jones, then we're going to mess with you. You could have a stroke at 50 easily. And if it's severe enough, you're going to need somebody to help you. And so that makes it worth it. Of course, you're going to spend money to have money. There's no free lunch when it comes to this, but as far as is it worth it? I firmly believe it's worth it. I can tell you that I've had 2 surgeries for cancer in the last 6 years, and I know what it cost just for the hospitalization of those. And if I hadn't done some proper planning with Medicare, I'd be on the hook for a lot of money. Fortunately for me, I didn't have to receive any care at home. But I've got friends that are my age that are receiving care at home or in a facility, and they're spending big time dollars for that. And if I can help you reduce the amount of a check you have to write every month, then I think it's really worth it.
What would disqualify someone from getting long-term care insurance?
That's a great question.
Yeah,
if you look at,
that's a popular one. A lot of people ask him that one.
If you look at a outline of coverage from an insurance company for what it won't cover, it's usually 2 to 3 pages long. You can't pronounce most of the things that are in there, the diseases and maladies and health issues that are there. But for the most part, heart, brain, lungs, mobility is a big one. If you have to use a cane or a walker or a wheelchair, you're not eligible. If you've had a history of, say, COPD or you have Parkinson's, or if you have MS, you're not eligible. And they look at medical records very closely to determine whether or not you're eligible or not. So that goes back again to that getting it at an earlier age before all this stuff pops up in your health history. And especially if you have a family history of certain things. If you have Alzheimer's in your family, if you have congenital heart disease in your family, it hasn't shown up in your health records yet. Do something before it does, because once it does, you can't get it.
Yeah. Let me toss out a couple questions here, because these are conditions I see a lot, and especially on my channel are very popular. But what about not a specific disease, but peripheral neuropathy, like chronic pain syndromes that could cause disability or potentially people not being able to work, but not specifically a heart, lung, kidney problem?
I think we separate disability insurance or disability problems from long-term care problems unless the disability affects mobility. If there's any chance at all that the condition might lead to the need for a wheelchair or a cane or a walker, something that first needs to get around, then I think you might find that it's problematic. If it's early enough, if whatever you're mentioning there, whatever this is early enough, they might still be eligible, but they might have to pay a premium because of the condition. So they wouldn't get the best rates that are available. They'd have to pay substandard rates for that, but they could probably still get it.
That's awesome. That's awesome. I've always wondered, like, say I'm a patient and I have long-term care insurance. At what point do I file a claim? Like, when are you ready to start receiving that care? Or do you talk to a doctor? Do I talk to you? How do we go about that?
Well, the claims process is pretty straightforward. It starts with a couple of requirements. You, as a patient, either have to have assistance with 2 or more activities of daily living: bathing, transference, preparing meals, toileting, those kinds of things. The doctor has to sign off on that. In effect, say, you're going to need help with this. I don't want you trying to take a shower by yourself. Or the other trigger is cognitive issues with the patient. If you are starting to exhibit memory loss of any kind or any kind of confusion, the doctor says, yeah, I don't want you left alone. That's the other trigger. Those 2 triggers will start the claims process in place. From that point forward, your doctor writes a letter. Your caregiver company then gets all the information from the insurance company. They will actually walk you through what you need to do. You put it all together, send it to them, they approve the claim or disapprove the claim, and you're good to go. For the patient, it's very simple. They don't have to really do anything. It's left to whoever's doing the care for them.
I know with disability insurance, for example, you have to continually see your doctor and get recertified. Is it something similar with long-term care insurance, or once you're on, you're pretty much on consistently?
Once you're on with long-term care, the change would be is if you came off. If it were something acute, for instance, that you broke your hip and you needed help getting around for 6 months or whatever, and then you got better, and the claim ends, then it's you would start it up again if there was another occasion that you would need it. But as far as being on care, they're always going to look at doctors' reports. There's always going to be a medical record need, no matter what.
So that's actually really interesting. And what acute means short term. So like something that's expected to get better. But you know, I didn't know that about long-term care insurance, but can it be used for like a broken ankle or a broken hip in those circumstances where it's not an end-of-life type scenario?
I'll give you an example, a real-life example. A friend of my father-in-law's, his son was going to go up and clean some gutters, and he slipped on the 3rd step of the ladder. So how far off the ground is he? 3 feet, 3.5 feet. But he fell backwards on his patio, and he landed on his elbows and broke them both. When they set an elbow, it's like this. What couldn't he do? Nothing. He'd be eligible if he had a policy to have somebody come in and take care of him, because ADLs, he's really in a bind with his arms like that. So he could use his insurance as soon as he gets better and comes off claim. What he has done is he's satisfied his beginning date. He never has to recertify his policy from a beginning date perspective. He'll still have to have the ADLs again as a trigger, but he won't have to wait if he doesn't have a waiver on the way.
That's awesome. That's awesome. Yeah, that's a great example. That's a great example.
I mean, that's real life. I mean, that's and he was in his early 40s when it happened.
You know, that's a very vivid example. I would say, Dan, do you have, you know, I liked your example, like when you had cancer, you used it. That gentleman who broke his arms, he used it. Can you think of other examples like that that are beyond just aging and end of life? You know?
Car accident.
Yeah.
Broken hip, broken knee, sports injuries.
Yeah, and especially in Michigan, that's important because of all the changes with...
My sister-in-law is 60 years old. She thinks she's still a hockey player. GM faces Ford every year down at Clark Park. They play hockey. Well, she took a shot to the ankle in that game and shattered it. They had to set her leg with hockey sticks.
Wow.
She's got like 7 pins now in her ankle, and she's off her feet for the next 4 to 6 months. Great example. If she had insurance for long-term care and needed somebody to come in and help her, she could file a claim with that.
Nice. And as a side note, we have the best, most watched ankle fracture video, if that happened to you.
God.
Anyway, go back to the
bones.
Yeah, we're number 1 on YouTube. But anyway, yeah, that's a great example. So
it could also be internal things though too.
Yeah.
My second cancer was liver. I had to have a resection done. They took 55% of my liver.
Wow.
Now, fortunately for me, as I said earlier, it wasn't a problem for me. I didn't have any pain or anything like that, but not everybody does surgery the same way.
Wow.
And if there was a need for help, I had to give myself blood thinner shots for a month. With my first surgery, I had an ostomy bag that I wore for 7 months. If I couldn't have figured out how to do that, I'd have had to have a nurse come in and do that 3 days a week. Wow. And insurance would cover something like that, but I got better. So, I mean, it would have ended for me.
That's amazing. That's amazing. That's a great example. So here's another question people ask is long-term care insurance tax deductible?
Mhm. The answer is sometimes. Depends on your age. The younger you are, the less of the premium you get to deduct. So when it starts about $450 for 40 to 55-year-olds, somewhere in that neighborhood. For a person 75 or older, the deductible is over $5,700. So most premiums aren't that high. So if they itemize their tax returns, it has to be done on an itemized basis. You can't just do a 1040 easy. But yes, you can deduct your premiums because it's considered health insurance. So it'd be just like, as long as it exceeds 7.5% of your adjusted gross income.
Wow. If someone here is in Michigan, if it's in Michigan, go see Dad. That's an easy one. But when is a good time? What would you say for the audience is a good time to start looking at it, and what steps should you start taking to get it for the average person?
I think the best age group to be looking at it, at least as preliminary kind of a thing, would be the 45 to 55-year-old. They've got kids at home. They've got parents they're caring for. If anything should happen to them, there's two different cohorts of people that are going to be suffering. So start looking at it at 45. You'll find that it's incredibly inexpensive. And it'll give you peace of mind knowing that as you get older, your kids aren't going to have to do what you're doing for mom and dad right now. And it's just smart planning to, everybody talks about planning, but they don't write it down or they don't actually act on it. And there's an old saying that says nobody plans to fail, they just fail to plan. And so if you're 45 and you're thinking about this, look into it. At least get some quotes, do a little homework, have your agent send you some literature, something you can learn from. And if it makes sense at that point, do it. Or if it doesn't make sense to do the whole thing, start out and ladder it over time. Do a couple thousand a month today at 45, and at 50, pick up another 2,000 a month. And do some laddering approaches to it so that as you get older, your benefit grows. And you're not spending all kinds of money on premium that you don't need at 45. Nobody's going to buy $6,000 of care at age 45 because they don't need it.
Yeah. And I can tell you, my personal experiences with Dad, talking to him, he is willing to come up to the house. He's willing to talk to you. If you're in the Metro Detroit area, I think this is a great resource. We see a lot of people that need this stuff, and Dan is our go-to person. And so I think from that standpoint, Dan, it's been an absolute pleasure. Let me get my hand here.
Thank you, my friend.
Yeah, and what's going to happen is down in the show notes, you're going to have Dan's contact info. And yeah, get a hold of this guy if you need anything. Thanks, guys. The bottom line is Medicare and Medicaid don't cover as much as they used to, and it's probably getting worse every year. This is where private duty home care companies like Assisting Hands can come in. People can come out and help with grooming, help with a parent with dementia going for walks, helping get to the bathroom, basically watching them. It doesn't have to be like 24-hour care where somebody lives in, but you can have scheduled shifts so that you can get a break, or your loved ones can get a break and they're not overwhelmed, or even to get to a doctor's office after a surgery. Assisting Hands Home Care has excellent reviews. I'm a big fan. I recommend using them if you need help at home that insurance does not cover, because the reality is it's tough how little it covers. And if this video helped, please give us a like, a thumbs up, a subscribe. We can talk about nerve pain here, but thanks for watching.